For the 25th time in a row, the Bank of Canada decided to leave its key interest rate unchanged today, but it also warned that our economy is changing for the worse. The benchmark interest rate remains at 1%. As CTV's Richard Madden explains, the economy is so weak right now, the Bank of Canada is considering going even lower.
These Canadian-made cowboy boots normally sell big in the States, but shop owner Ben Gerwing says this year, cash-strapped Americans simply aren't buying them.
I'd say it's a little frustrating. It kind of seemed that everything hit at the same time. We have definitely seen less orders coming in, less exporting into the States.
A worsening export market, plus a shaky global economy, has forced Canada's top banker to dramatically downgrade the nation's outlook for the next 3 years.
This leaves the level of economic activity lower than what the bank had been expecting.
Next year alone, the central bank slashed the pace of growth by 0.4%, and that translates to more than a $6 billion hit to the economy.
It's basically a stalled speed, so it's basically the economy is seeing relatively little to no growth in 2013.
The bank even left the door open to cutting its key interest rate if economic conditions worsen. It's a message that worries some housing analysts that prolonged cheap borrowing could trigger a correction.
As these rates do stay lower for longer, it could mean that even more first-time homebuyers who are anxious to get in the market, when they enter, they could potentially overextend themselves and find themselves in a home that when rates do go up, they may not be able to afford.
The central bank tried to sprinkle some optimism in its gloomy outlook. It now says the economy will gradually return to full capacity, but not until the end of 2015. Richard Madden, CTV News, Ottawa.
The outlook for 2 Canadians and 26 other green